Are you tired of high medical bills and the fear of unexpected expenses draining your savings? If so, I have good news for you. Health Savings Account, or HSAs, offer unique opportunities to take control of your healthcare finances and secure your financial future. HSAs offer a unique combination of tax advantages, savings opportunities, and flexibility that make them a valuable component to any comprehensive financial plan. Picture this. You spent years working hard to build your wealth and create your dream retirement. You've worked with a financial advisor and pored over countless spreadsheets to ensure every detail is accounted for. But what happens when the unexpected strikes? Health issues can throw a major wrench in even the most carefully crafted retirement plan, leaving you feeling vulnerable and overwhelmed. It can be devastating to watch your hard-earned savings be depleted by a single hospital stay or a major medical procedure. That's why I always recommend health savings accounts to clients who are eligible. I'm Jacob Hartke, Wealth Advisor at Sweet Financial Partners located in southern Minnesota. We specialize in helping clients navigate the complex world of retirement planning. Our trademark Dream Architect process is designed to help you create the retirement of your dreams. And one crucial tool in this process is a health savings account. This powerful financial tool can help reduce the potential burden of unexpected health issues and ensure your retirement plan stays on track. So let's talk about what we can do together to build a retirement plan that's built to last, no matter what life throws your way. I have a client, let's call her Sarah. She came to me a few years ago with concerns about healthcare costs. She was in good health, but worried what would happen if she needed a major medical procedure in the future. I recommended that she enroll in the HSA that her employer offered. Fast forward to today, Sarah has taken full advantage of the tax benefits provided through the HSA, and she's been able to save thousands of dollars for future medical procedures. Just last year, she had a surgical procedure that she was able to pay for entirely out of the funds in the HSA. She was relieved to not have to dip into her savings and was able to keep her financial plan on track. Sarah's story is a prime example of why HSAs are so important to a financial plan. They offer the peace of mind that comes with having a dedicated account for healthcare expenses, and the tax advantage and saving opportunities make them a smart choice for those who are eligible. In this video, I'm going to share with you the ins and outs of HSAs and how they can be a powerful tool in your financial planning arsenal. One, let's start with what is a health savings account? A health savings account is a tax advantage savings account that you can be used for qualifying medical expenses. It's paired with a high deductible health plan to provide an affordable healthcare option. High deductible healthcare plans usually tend to be more cost effective. The idea behind an HSA is to combine the lower monthly premiums with a high deductible plan with a tax advantage savings account to help you pay for those healthcare expenses. So how does it work? You can contribute pre-tax dollars to your HSA each year up to a certain limit set by the government. This money can be used to pay for a wide range of qualifying expenses, including doctor's visits, prescription drugs, and hospital stays. Any money you don't use in one year can be rolled over the next. The money in your HSA account grows tax-free, and if you use the funds for qualified medical expenses, you won't pay any taxes on the withdrawals either. This allows you to build a substantial nest egg for future medical expenses. So are you eligible? In order to be eligible for an HSA, you have to be covered by a high deductible healthcare plan. A high deductible healthcare plan is a type of health insurance plan with a higher deductible than traditional insurance. This means that you'll pay more out of pocket before your insurance kicks in. You must be under the age of 65 and not enrolled in Medicare. You cannot be claimed on someone else's tax return as a dependent, and you cannot have any other healthcare coverage that is not a high deductible plan unless it's specific, such as dental or vision insurance. It's also important to note that you cannot make contributions to an HSA if you are already enrolled in Medicaid, except for certain disability-related circumstances, or if you're covered by a general purpose health flex spending account. As stated above, there are contribution limits for HSAs. The maximum contribution limit for individuals with self-only coverage under a high deductible plan is $3,850 for 2023, whereas family coverage, the maximum contribution for a family is $7,750. Individuals over the age of 55 can also make a catch-up contribution for their HSA. For the year of 2023, the catch-up contribution limit is another $1,000, which means that anyone over the age of 55 can make an additional $1,000 on top of the regular contribution limits for their coverage type. Contributions must be made by the due date of the tax return, including extensions for the tax year in which the contributions are being made. Great news is that means you don't have to contribute by the end of the year. You usually have until April to make those prior year contributions. When can I use the money I put away? The good news is you can access the funds in your HSA at any time. HSAs are owned by the individual. And if you're under an employer plan, that means you're still the owner, not the employer. And the funds also follow you even if you change jobs or retire. So that's right, your HSA is your money and you can use it to pay for your qualified expenses whenever you need to. Qualified medical expenses include any expenses that would generally qualify for medical or dental expense deductions, like visiting the doctor, prescription medications, and medical procedures. However, it's also important to note that if you withdraw funds from your HSA for non-qualified medical expenses before you turn 65, you'll have to pay taxes on the withdrawal plus a 20% penalty. So it's important to use the funds in your HSA for qualified medical expenses only. So how is this going to help my financial plan? An HSA can help you reduce your taxable income, and your contributions to an HSA are tax deductible, which means that you can reduce your taxable income by the amounts you contribute. This can also be helpful if you're in a higher tax bracket. An HSA can help you build up savings because the money in your HSA can also be invested. So it has the potential to grow over time. And if you don't use the funds for medical expenses, you can take them out penalty-free at age 65 for any reason. So if this is a long-term investment vehicle, how does it work with Medicare? If you're over age 65, the rules loosen up a little bit. You can use your HSA funds for non-medical expenses without incurring a penalty. Although you will owe taxes on the withdrawals, one of the most common uses for HSAs after age 65 is to pay for your Medicare premiums, deductibles, and copays. These are all qualified medical expenses that can be paid for using funds from your HSA. You can withdraw funds from your HSA tax-free for any qualifying medical expenses, regardless of being covered by a high deductible plan or not after age 65. HSAs have no expiration dates, so you can accumulate these funds and use them for medical expenses in later years. HSAs are also transferable to your spouse or other beneficiaries, making them useful tools for estate planning. Another benefit of an HSA after age 65 is that you can use the funds to pay for long-term care expenses. Long-term care can be a significant expense during retirement, and having an HSA can help lower those costs. So let's circle back to Sarah here. What if she hadn't opened up the HSA and still needed this medical procedure done? She would have had to spend down some of her savings that she could otherwise use for more things in retirement. Sarah was able to reap the rewards of her HSA and utilize the tax benefits to save thousands of dollars on those medical expenses. She was even able to pay for the whole surgery from her HSA funds, avoiding the need to dip into her other savings. Sarah's experience is a testament to the value of an HSA in a financial plan. They provide a dedicated account for healthcare expenses, peace of mind, and tax savings opportunities. An HSA is just one of the tools to help overcome some of life's biggest obstacles. Brittany Anderson, president of Sweet Financial Partners, shares 3 easy steps to overcome some of life's other biggest obstacles in her video, 3 Ways to Overcome Life's Biggest Obstacles.